The world and investments are never going to be the same. And in this video, I'm going to explain to you why investing in money is so different than it was 10, 20, 30 years ago, and why you need to think completely differently than how you were thinking, and especially how your parents and your great-grandparents were thinking, all right? But before we jump into that, let me show you just real quick what has happened since our last technical roundup, which was a few days ago. We talked about this really key level in the S&P 500 hitting resistance, right? We started to form this trend. We had a touch here, touch here. Our third touch was perfectly at the 200-day moving average, which is really important level. Technically speaking, we had a rejection off the 200-day moving average, which is extremely bearish, especially when you're considering that's also at a technical space where we actually hit resistance twice previously this year. And if we were to look at volume as well, you can see this is the most amount of volume right in this same exact spot, which is right where we're at. So if we do start to fall a little bit more in the S&P, we don't have a ton of support much lower. And you can also see that volume is in a downtrend. See how these bars are going down? These green and red bars are going down and down and down. You're seeing volume slow down. You're seeing us hit a really key level. We bounce off the 200-day moving average. We broke a really strong support on the RSI, and it is appearing also that we're tightening and we've got high inflation and all those things. It's definitely pointing to lower prices. So let me show you exactly what I'm talking about here on why the world is so different. And also I'm going to share with you at the end of this video what I believe the solution is, at least for me, and what I'm doing. Obviously, I'm not a financial advisor. I can't show you what to do because I don't know who you are and what your circumstances are, but I can let you know what I'm doing and why. I think it's really important to have context to be able to understand what your potential solutions are. First of all, I've talked about this a little bit this year, but this is so important to understand. The world is so different now because look at this inflation, right? We've got 210% inflation, 149%, Zimbabwe 257, Venezuela 137, Syria 139, Turkey 79, Argentina 71. I mean, look how intense this inflation is. And that is so difficult for people to live. Can you imagine working for money and then losing 50% of the money that year because it's just being devalued, right? The people that do not understand how bad inflation really is, and I think it's really understated, specifically in Europe and the United States. And I don't think people understand how important it is. And this is why it's so important. This is why the poor and middle class get poorer, unfortunately, and the wealth gap continues to grow because wealthy people understand this aspect, and it just got exponentially worse over the past 2 years because we increased the money supply by 50%. So out of all the US dollars we've ever had in the history of the US, we increased that by 50%, which is insane. To do that in a 2-year period of time is detrimental to the dollar, not to mention the dollar is not even in a bad place relative to these other currencies worldwide. So this is what I wanted to show you. And I've talked about this one other time publicly, which is the total market value of US stocks divided by M2 money supply. All right. So most people use M2 to be able to look at, okay, what's the money supply in the US? All right. This is pretty much taking out of all of the money that we printed, we're taking that out of the equation, right? So we're looking at the total value of US stocks, specifically if we take out all of the money printing. Now, we had a high in 2000. This is during the tech bubble. All right. And then this was 08, 07 into 08. And we're actually below, right now, we are below where we were in 2007. If we were to take out all the money printing. Let me show you what this looks like. Over, a short period of time, we're looking at an absolute parabolic move. So this is the S&P 500. So AKA, US stocks, which you could look at multiple other indexes. This is a really good way. Let me just remove this indicator for you. It's a really good way to understand how high we've been. Look at this parabolic move that we have had, specifically over the past 2 years since we have printed this money. Okay, look how big this V shape is. It is insane, the amount of growth that we've seen. To see this type of meteoric rise in stocks where we had literally 116% in a year and a half is insane. All right. But this is what's more important to understand is the chart that I just showed you. Remember, look, guys, we are below where we were in 2007 if you take out the money printing. If we actually go look at a chart right now, we are way, way, way above where we were in the top of '07 before '08. We're up 160%. But that's because we printed so much money. And that's what's really, really scary is to think about that, right? We have this illusion that we have created so much value. I used to look at this chart and be like, oh yeah, technology came and it exponentially grew. So now we have all this new value. But really what it is, guys, is the amount of money that we have printed. Because if we take out the amount of money that we printed over the past few decades, you'll see that actually stocks are down. And that's scary because everyone thinks this. But the sad thing is like I said, poor middle class are going to get poorer, right? And the wealthy are going to get wealthier because the poor, right? If they were working for $12 an hour back in '07, guess how much that was actually worth? It's probably worth like $8 an hour, $5 an hour, $6 an hour, right? So, and they have the inverse of this. So if you can imagine, if you can flip this chart upside down, that's what's happening. And it's actually even worse than that. That's what's happening to the poor middle class that do not understand that they need to put their money, their hard-earned money that they work for, the fiat currencies that we all use, they need to put that into assets. Because if you don't invest into assets, you just get devalued and you lose all the value that you're working for. And it's even worse than people think. Right? If you actually factor in the amount of money that we've printed and you look at that on a chart, this should dramatically open your eyes. So what is the solution? The solution, I believe, is scarce assets. And whether you like Bitcoin or not, you probably do because you watch my channel and I talk about it a lot. I really do believe that we're moving into a digital era and we're seeing globalization and we're going to reach a point where people are consistently using digital currencies, and we're already seeing this take place in the Gen Z and millennials, right? They actually want to invest into digital assets more than they want to invest into stocks. And we're starting to see, over 100 million users in specifically Bitcoin and even more in cryptocurrencies abroad. And that's directly on track with the early stage growth of the internet. And I could show you a zillion different charts, and I already have. You got to realize that this is likely happening. But if you don't like this, at least be putting your money into scarce commodities and into higher growth tech companies that you think can outpace inflation. Because if you're not outpacing these numbers, you're screwed. You're losing value. Like Zimbabwe had over 300% inflation the other year, and they had like a 313% return in their stock market. But actually, if you had that 313% return in the stock market, they actually lost money. And that's how sad the reality is that we live in. The even worse thing is this is not going to get better. Like there's not going to be a point where, the government start to be like, oh, inflation is bad, so we're not going to print money anymore. Like it's very unlikely that we go back onto the gold standard or anything else. I think you really got to think hard about where your money and value is sitting and put that into place that can outpace inflation. Because if you're not doing that, you're losing value. And I think a lot of people don't even realize and understand this chart and understand what's actually happening and understand that, most of the government officials that are in place in countries like the United States, they're on 4-year sprints. So all they're trying to do is prop up and have good numbers for 4 years. And then after the 4 years, they're out of there. So like they want to have a good legacy while they're in there. So they're going to prop stuff up, which they do with the decrease in interest rates and also the increase in the money printer. So like there's no incentive for a president to come in, specifically in the US, which then has a ripple effect on everything else, to like stop the money printer and create massive deflation. Like that would just destroy the United States if they did that. So, which would destroy their legacy, which they have no incentive to do that. So I hate to tell you, but I don't see this getting any better. So really hope you think about this. I hope this chart sticks in your mind and you really think a few times about this, and more importantly, take action, because this really, really opened my eyes to what is actually happening with our dollars, our currencies, and the assets, and the price appreciation that we think we're having are we actually having that price appreciation, or are we just seeing the devalue? Because like this is stocks denominated in US dollars. So when the US dollar goes way down, it looks like stocks go way up. And that's how every other asset is. So realize that. All right. Anyways, hope you got value from this video. If you did, let me know your thoughts below. Would love to hear your thoughts on this chart, hear your thoughts on the stock market. I did want to let you know, people think the stock market's going to have a 58% decline like we did in '08. I don't know that that's going to happen. And the reason is because like that would be this type of a move. I don't think that's going to happen because if you were to take out the amount of money that we printed just in the past 2 years, like we've already had a 50% decline in the stock market if you were to take out the money that we printed. If you're not taking that out, we've technically only had like a 25% decline at the bottom right here. Considering and factoring in all of the money that we printed, I think it's pretty unlikely that we see a move all the way down to here just because there's so much more cash in the system. Could we, I think what's likelier, which obviously I don't have a crystal ball and I have no idea what I'm talking about, but I think what's more likely, to be honest, is like more like a 30% move. Maybe we test the highs over here before COVID and then maybe we come a little bit below. 38% decline is pretty typical. Right around like a 32% decline is typical during a recession. So we'll see what happens. Anyway, I'd love to hear your thoughts too. Do you think we're going down 58% like '08, or do you think that because all the money that we printed, it's going to prop stuff up and it's going to really confuse people? Let me know in the comment section below. Really appreciate your viewership and attention, and I hope to see you here on this next video.